Let's get in Ashish Bhandari, Managing Director and CEO Thermax, who joins us right now on the show. Ashish, it's been a really long time, but good talking to you. This is Neeraj here. I hope all is well.
Neeraj, all is well, and thank you for having me on the show.
Yeah, it certainly looks like Q2 turned out to be a lot better than what the street was working with. Did you pencil this in, or has it turned out to be slightly better as the turn of events happened?
I would want to take 2 points out. One, on the order side, when we started this year, we had talked about how this year we do expect some bigger orders to start coming back, because all of last year we were working with work that was going on, but we really didn't see too many big orders coming in. This year, that trend should reverse, and Q2 is a good example of that. Even as we look at the next 3-4 quarters, we have got other bigger opportunities also in play. If I take that big opportunity out, we have been growing steadily in a lot of the rest of our business. Industrial products has been growing double digit now for multiple years, and we see that trend continuing at least in the near future as well. On the margin side, there was one exceptional item in Q2, which was not unexpected. This relates to a PSI, a production-linked benefit that we got from the Maharashtra government, which is a scheme that one of our new plants was part of for some time. But now that the assurance of the benefit coming through is certain, we started to show this. This will continue in smaller amounts for a period of time, but this was a one-time, relatively bigger number that we showed in Q2. If I take this number out, actually our profitability was slightly below what we would have expected, and that is driven by continued challenges that we have on the execution front on bigger projects.
Okay. Before I get into internals, Ashish, and some of these is really good to know, is this being led by global orders per se, or is domestic order flow looking good? The reason I ask this is because every single company that I've spoken to has said that because of government spending not being up to the mark, things are looking iffy or have looked iffy in the first half, and they'll improve once government spend comes back.
I would be in that similar bucket. The Indian spending is, and we are not directly driven by government spending, but we are driven in some ways by push through of government policies as such. And in that sense, the India numbers have been flatter in a way than international. International, after quite a bit of relative lull in the first 2 quarters of this year, has outperformed our India business. And even in Q2, the big order that we got was actually from an international project. If I look at India, we are not dependent, as I said, on government infrastructure specifically, but the one big segment where growth has been relative to last year, particularly muted, is in what is called as the 1G, the ethanol industry, which is derived from government policies and marketing agreements that the government hands out for a lot of what is called as this blending program for ethanol. Yeah, which is the projects are set up by various different players in the sugar industry and distilleries, etc. Many of those projects are on the anvil. Handshake has happened, but the financial closure and their agreements with the government oil marketing companies, etc., have been delayed. So I do see some amount of flattening on the India numbers, but when I talk to customers, I see a lot of positivity and optimism. So I expect the second half to be better. But so far, I'm in the same bucket that you talked. Many others are looking at.
So you may not be connected, Ashish, but some of your clients might be. So I'm just trying to understand, are you sensing some uptick in government spend? I mean, we were talking to a forging company which said that some of that has happened. Couple of cement companies mentioned that some of that is starting to happen. Do you sense that or not as yet?
Not as yet directly, but I'm not seeing particular scenes of any major slowdown or anything. Our distributors, our channel networks, every time I speak with them, they are still bullish on the outlook. They say their customers are are looking to spend. And so I'm seeing reasonable amounts. Yeah, I'm just saying there's a flattening relative to what we have been going through for the last couple of years. And even there, most customers, as I speak with, indicate that the second half should be better. I'll caveat that by saying that yes, I agree. The first half has been flatter on the India front, clearly.
So let's assume that India front also improves and some of the other things also go as per plan. How do you foresee the second half for yourself, both on order inflow and revenues, and two also on profitability? Because I'm guessing it's a very volatile environment to manage cost pressures.
No, I think on the revenue front, lot more confidence given our backlog, and the backlog will liquidate itself at a reasonable pace. There's some amount of slowdown, as I said, relating to project execution that affects profitability to a little extent, but that should be manageable for a company of our size. Overall, from a profitability perspective as well, we are in a fortunate environment, in my opinion, where commodity prices have been stable. There's some amount of inflation on the labor end, but in general, steel prices and variety of other commodity prices have been stable. Yeah, despite the war and everything, oil prices, etc., haven't really gone up. So I wouldn't blame the environment at all. The project delays and the execution challenges are more related to labor, construction challenges. We have had climate-related issues on multiple fronts where rains, etc., have delayed things significantly. And other than our chemicals business, which is dependent on exports and some of the impact of freight, etc., which showed up in Q2. But even that, I think now that we have taken whatever was the impact in Q2, Q3 onwards should start to look better. So I don't think on the profitability side we can blame the environment. It is Thermax's own execution and how we operate that. I think that would be the question.
You've done very well in quarter two, right? As I was looking, the highest operational metrics, at least since September 2021. Do you reckon this can continue? Is this a sign of things to come?
I don't think, to me, the Q2 was a okay quarter, wasn't an exceptional quarter, and the reason is that
On the
the
margins, I
one
mean.
time I,
Sorry,
the
on the
one time, sorry, go ahead.
sorry. I meant on the margins. I mean, it was.
I meant on the margins, yeah,
Okay.
because we had that one-time PSI impact that we had, which was 60 odd crores. Last year also we had a 12 crore positive. But even if I take that net of the two and say, look, we had a 50 crore good guy this quarter. If I take that 50 crore good guy out, the numbers were below my personal expectations. Yeah, and the place where we underperformed was first primarily on large projects and large government projects, which we are going through on the execution front. And second, little bit on our chemicals business. On the chemicals business was driven, as I said, by some of our export-related issues relating to freight that we will recover in Q3 and Q4. Executing large projects better continues to be one of the things Thermax has to do better on.
Okay. Just very quickly, Ashish. So you sounding very confident about a strong second half. Was there a formal guidance given, and do you think you will beat that?
No, we haven't given a formal guidance, and I don't want to come across as bullish on the second half. I think on revenues and general profitability, I think we will continue to improve year on year. I think that's largely driven by a backlog. On orders, I would be in the wait and watch category because especially on the India side, we have seen, as I said, some flattening. It's not a dip by any means, but some flattening of the growth. And I would like to see that come back in Q3 and Q4, which means that the order inquiry that we have, we would like to see those translate into orders, customers paying advances, LCs being opened, so that you can formally get started on that.
Okay. Ashish, maybe what we'll do is, while we have to wrap up right now, maybe if time permits you, we'll talk closer to the end of the calendar to try and gauge how is the scene shaped up. It will be really informative at that point of time.
I think that would be a discussion I look forward to as well. Thank
Great.
you.
Thank you so much, Ashish. And congratulations on a good quarter. All the best for the quarters ahead. That's Thermax. Again, in his words, not sounding overly bullish, but certainly sounding confident in tonality and in terms of the numbers.